Most people I talk to completely misunderstand how much they actually need to buy a home, especially here in the Denver area. You might be thinking, I need 20% down or I am completely out of luck, and to that I say, you have much to learn, young grasshopper. What if I told you it's entirely possible that you could put down as little as 3%, 1%, or even 0% down? Yes, 0% down, and I'll show you exactly how in this video. Most of the loan programs that I'm going to be talking about in this video are nationwide, but I'll even touch on a couple of loan products that are specific to Colorado. So stick around. If you think that buying a home and home ownership is completely out of reach, I might be able to change your mind. So let's dive in. Let's talk about the most common loan product out there, the conventional loan. And before I dive in deeper, I just want to make sure that you know that I am not a licensed lender here in the Colorado States. I am not a licensed lender in general. This is just based on my experiences with buying my own homes and also my rental properties, and also helping out my clients purchase their investment properties or their primary residences here in Colorado and even back in California. So if you want a professional lender to help you out with your journey in financing your first home or even second home or investment property, hit me up because I have probably the right person for you. All right, so back to the list. Let's start with the standard conventional loan. And this loan is probably what you're used to, where you put down 20% on a home, and when you're looking at a $500,000 property, 20% of that is $100,000. And with the standard conventional loan, it is probably the most common because lenders like it. You're putting a significant portion down, they cover the 80%, and you're good to go. But when you put things into perspective of 20% down on a $500,000 property, that's $100,000 that you have to save up, and ain't nobody got time for that. Going back to basics here, in case you don't know what putting money down means, it means that you, the buyer, are putting down a certain amount of money so that you show the lender that you have skin in the game in the property. So when you invest 20% as a down payment on a home, it means you put in 20% of the home's value and the lender will pay for the other 80%. And that 80% that the lenders are paying comes in the form of a loan, usually over the course of 30 years with a fixed interest rate. I'm not going to go too much into the details of definitions, what down payment is, equity, and all that good stuff. But if you are curious, let me know in the comments below. And if you have any other questions, feel free to text me or give me a call. All my contact information is down below in the description. All right, now back to the actual list of different loan products here. I mean, 20% just seems out of reach for a lot of people. And me personally, I have never put down 20% on a property. I have used these other loan products to help me scale my real estate portfolio. The same conventional loans that allow you to put down 20% on a property, you can also put down 5 or even 3% down on that same property if it's your primary residence. So let's say, for example, a 5% down payment on a $500,000 property, you're only putting down $25,000, and comparing that to $100,000, it's a much easier pill to swallow. And when you combine your funds with, let's say, a significant other who will go in on a property with you, $25,000 seems very reasonable. So along with the down payment, you also have closing costs to take care of, and I would assume maybe about 2% of the home value to be the cost of the closing costs. So 2% of $500,000, you're looking at about 10 grand. So 10 grand for closing costs and 25 grand for the 5% down payment, you're looking at an all-in cost of about $35,000. And to be fully transparent here, there are also some other fees along with it. For example, the realtor fees, and I'm not going to get into that much because as of last year, things have changed pretty dramatically as far as how the realtors get paid for the representation of either the buyer or the seller. And if you're finding this valuable so far, let me know by hitting the like button, hitting the subscribe button, and also hitting the notification bell so that you're not missing any other videos coming up in the future. Real quick, before we continue, if you're thinking about moving to the Denver area, I have a 100% free relocation guide. Here, this QR code is right here, will take you right to it. Like I said, it's 100% free. It takes you to the biggest employers, the hospitals nearby, and also some of my favorite food places. And it gives you a good introduction to the Denver area. make sure you go check that out. Like I said, it's 100% free, and I wanna make sure you're making the right decision in where you wanna go and also how you want to go about it. So if anything, you can also hit me up. All my contact information is down below in the description. Yeah, like I said, all free, lots of good stuff right there. Make sure you go check it out. Anyways, back to the loans. There is a catch for those people that want to put down less than 20% on a home. Let's say for those of you who are interested in that 5% down payment option, there is a catch. That catch comes in the form of a fee called a PMI, or private mortgage insurance. And what exactly is it? I guess a pretty simple definition of what PMI is. It's a way for lenders to protect themselves against a loss if the buyer fails to pay their mortgage payment. And for me personally, I would prefer to pay that PMI fee instead of having to wait till I save up 20% down on a $500,000 property, which is $100,000. That just seems astronomical to me. So how much is this PMI fee? Well, for a PMI, it's usually ranging from about $100 to $300 per month, depending on the loan amount and the value of the home. So let's compare apples to apples here, right? Would you wait to save $100,000 to pay for that same $500,000 property? Or would you try to get into the home as soon as possible and build that equity over time and have the market work with you with just $25,000 and having to pay, let's say, $200 a month along with that? And for me, I would rather pay the 25 grand. So I digress. Let's go into the FHA loan product, which is the same exact loan product I used for my very first house hack back in San Diego. It's an attractive option, especially comparing it to conventional loans, because of a couple of reasons. For example, they're easier to qualify for, allowing you to have a lower credit score. And you can also put down 3.5% on the home price. And lastly, the debt to income ratio can be higher than if you were to use a conventional loan. Basically, the loan guidelines are lowered. And even if the FHA loan is not enough to help you buy your first home, you should actually look at the CHFA home loan, which is the CHFA, Colorado Housing and Finance Authority loan. I worked with a couple of clients that have used this CHFA loan to its fullest extent, and honestly, if I were a first-time home buyer, I would take complete advantage of this product. So what it basically is, it's specific for Colorado residents, and they will pay the lesser of either $25,000 for the down payment on your home or 3% on your first mortgage, and no repayment is required. So knowing that CHFA's grants process can help you get into your first home with them covering your down payment is very clutch here. The only thing you have to worry about is the closing costs, and even then, I'd say it's still completely worth it. Now on to the question of the day. How many of you out there would actually take advantage of the CHFA loan program? Let me know in the comments below, because if I was here in Colorado, like I said earlier, I would take full and complete advantage of it. It just seems so nice to know that Colorado wants to have more homeowners in Colorado own their own home, as opposed to being renters or having other investors purchasing, let's say, hundreds of single-family homes. I digress. How many of you would actually take advantage of this program? Let me know in the comments below. Hey y'all, real quick, as much as I love making these videos, there's only one thing I love more, and it is making sure that you're moving to the right neighborhoods and you're making the correct move over to the Denver area. And I love helping out families. I've helped countless families move over to the Denver area, and I want to make sure that you're making the right move as well. So if you're ever curious and want to hit me up, all my contact information is down below in the description, just right there, maybe like a couple inches down. Make sure that you hit me up. You can set up a Zoom call with me. You can text me. You can even call me if you want to reach me. So looking forward to it. I want to make sure that you're making the right move. On to the last segment, I want to introduce you to a couple of loan products out there that allow you to put as little as 0% down on your first home. Before I get into these loan products of 0% down, I want to make sure you commit to memory that the less money you put down on a property, the bigger the loan amounts, which means you have to pay a higher monthly mortgage. This is a super important concept to understand, and if you're ever confused about it, then make sure you hit me up. Like I said, all my contact information is down below in the description. Shoot me a text and I will help you out in trying to understand this concept. It is fundamental for you to understand it, especially being a future homeowner. All right, so the first loan product that I want to talk about where you can put down 0% is the physician loan. And it's awesome that you can put down as little as 0%. And not only that, but sometimes the interest rates are better than what the market rate is. So who exactly qualifies for this physician loan? And it's usually a medical resident, a fellow or attending physician, usually 7 to 10 years out from medical school, or a dentist, or even a veterinarian. The second loan product that you can put down as little as 0% down on is the VA loan, or Veterans Affairs loan. And this is particular to those who are active duty service members, veterans, or eligible surviving spouses who meet the Veterans Affairs requirements. Both the physician's loan and the VA loan sidestep the PMI costs. You know, remember that $100 to $300 per month that you would have had to pay if you put less than 20%? So both of these loan products that I just talked about, the physician loan and the VA loan, you do not have to pay PMI on that loan. Of course, this does not mean that you can go out and purchase whatever property you want, right? It will depend on how much you make and what your debts are going into it. So make sure you work with the proper lender to make sure that you can, number one, qualify for these products. And then number two, see what your budget is going into the real estate market, especially here in the Denver area. And last but not least, I do want to mention the third loan that you can put as little as 0% down on, and that is the USDA, or U.S. Department of Agriculture loan. And it's kind of crazy because you could purchase rural land for 0%, and it's all thanks to this USDA loan. There are some requirements for it though. Those requirements are: you need to be a U.S. citizen, you need to have a minimum credit score of 620, and a DTI, or debt to income ratio, of 41% or less. And for me personally, I don't know anyone who has used this USDA loan product, so take it with a grain of salt with everything that I'm telling you. It's just, I've heard this loan product go around, and I think it's pretty fascinating, especially if you're just wanting a home or lots of acreage out in the boonies, want to be away from civilization, and want to take advantage of this kind of products. I think it's pretty sweet. So these loan products that I just mentioned are in circulation with the majority of transactions that happen here in the industry. And for those that are using it for their primary residence, I think these are still great options for you to use. There are still a lot of other loan products, let's say the DSCR loan, or debt service coverage ratio loans, that are mainly geared towards investors, or even the second home loan who want to have a vacation home. There's a lot out there, but I think these are the main ones that I want to talk about, at least in this video. So as a reminder, if you found this valuable, make sure you hit the like button, hit the subscribe button if you haven't already, and also hit the notification bell so you're not missing any other valuable Denver related stuff, whether it's lifestyle or like real estate stuff. I want to make sure that I'm making some really good content for you and you're not missing it. Of course, if you think someone else within your family or your friends would find this valuable, make sure you hit the share button, share that URL right up here or down here if you're on mobile, and share it with your friends. So I truly appreciate it, guys. Thank you so much for watching, and I'll see you next week.